Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. We are thrilled to have joined us now. We are commercial-free in this hour. We're going to use as much time with her as we can. Ann Sonders is with Charles Schwab, and she has earned the ability not to work on the Friday after 4th of July, but she's a trooper. She's here. Plus, the Gordon guy, I mean, like he wants the job. Let's be honest, Paul.
Yeah, he's pretty good.
He's pretty good.
Yeah, shame on the BLS for doing this
yeah.
Day after the 4th.
What an interesting market. Ann, there's a lot of people. They're on the deck. They've got the light tonic. They've got the gin, they got the umbrella in the drink, whatever. And they're going, what in God's name do we do now? What is the action allocation of Charles Schwab into the end of the year?
Well, Tom, we've talked about this a lot, just the beautiful discipline that is rebalancing. And I think that helps when you have a concentration problem like you do now. But the concentration problem is exacerbated by the huge underperformance outside of the small handful of mega cap names. The NASDAQ's average member maximum drawdown is almost 40% this year. That also breeds opportunities. And it wouldn't surprise me if we see some consolidation and some convergence where you get some profit-taking episodes up the cap spectrum into those leadership names, but opportunities present themselves in other areas of the market. We've seen some cyclical leadership crop up in the last week or two. That's kind of interesting, but I think really key, you still have to stay up in quality. Just the profitability differential, particularly within an index like the Russell 2000, is a 20 percentage point spread in the past year between not profitable and profitable, strong balance sheet, high interest coverage. Yeah. So that's our message for within the equity asset class.
This is what surveillance is about. Lindsay Pieggs are with us. Ann Sonders with us in 10 minutes. Neil Dutta scheduled to join us now. We got him he's on a ferry to one of the islands. Okay. I don't know which one he's on, but we'll get Dutta.
Cell phones.
Sonders is working today.
Exactly.
Even though the backdrop, it's amazing how they can put that backdrop wherever she is.
I know. That's how it works.
It's a technology.
It goes with me.
Exactly. Ann, so what's the catalyst for this market going forward? If there's any life left in this market for over the next 6 months or so, is it Fed-driven? Is it earnings-driven? A combination? Is it a rotation, as you were suggesting, maybe into some other sectors?
I think it is a combination. We've seen less of a correlation in terms of the expectations around Fed policy, the sort of parlor game of when will they start, by how much. Even just with the jobs report today, it was probably knee-jerk on the payrolls with that before digesting the additional information. You actually saw a move down in terms of expectations for September start to rate cuts. I think it's more on the rate side of things. I think yields is the more important driver. Now, there's a relationship, obviously, between what's going on with Treasury yields and expectations for Fed policy, but I think a calming in some of these sort of shots higher in yields would help the equity market. Obviously, earnings is a big part of that, and we're sort of at the prove it to me moment in the equity market, given that even for the Magnificent Seven of the top 10 names, you've seen more price appreciation than you have earnings appreciation in terms of consensus estimates. So I think earnings season will be incredibly important, the combination of top line, bottom line, but also the protection of profit margins, and whether that is across the board or still in a small handful of names.
And Ann, you start off our discussion here talking about the top-heavy nature of this market. How unusual are we today in terms of that market concentration versus maybe some past cycles?
Well, the largest 10 names as a share of the S&P is up around 38% right now. That well exceeds what we saw back in 2000, but they're were periods back in the 60s and even in the, I think, late 20s or early 30s where you had similar concentration. Now, in the case of the early 30s, of course, that was a less sophisticated market backdrop, and there were not as many companies. There were some of those dominant companies, but I think that the concentration problem becomes more acute when you have a large share of the index underperforming the index over whatever rolling period you want to look. It's only about 17% of the S&P that has outperformed the parent index over the past year, and it's lower for an index like the NASDAQ. So it's the combination of leadership up the cap spectrum, dominating performance of the cap-weighted indexes, but the lack of participation in other parts of the market. It's that combination that tends to suggest risk is elevated.
And I'd love to be one of those folks that I think I'm the smartest person in the room and saying, I'm going to start looking for value outside of those big 10, 7 names. But boy, you have to have courage to do that, don't you?
Well, but here's the other funny thing when we talk about the performance up the cap spectrum in the mega cap names, whether it's the largest 10 or the Mag 7. Actually, only one of the Magnificent Seven is in the top 10 best performers within the S&P. We're so focused on the contribution that they represent, which is price times capitalization equals contribution to the S&P. But there are a lot of names, in addition to not performing very well, that are performing incredibly well. In fact, last time I looked at it by sector, there were 3 in the top 10 that were utilities stocks, GE in the top 10. So there are opportunities outside of the largest 10 or the Magnificent Seven or the Fab Five, whatever terminology you want to use. And I think that gets lost in so much focus on those names. It's the cap piece of it that has been so additive to contribution to overall S&P returns.
We continue with Ann Sonders, Charles Schwab, Neil Dutta on deck. He'll be with us here in about 4 minutes. We've got a lift to the market, much less than I'd expect off the jobs report. It has something to do with this Friday, this special Friday across the nation. And NASDAQ up 0.2%. Green on the screen, 12.23 is the VIX. The yield space moves, but within range. The 10-year real yield, 2.03%, is decidedly not broken down off of a huge revision that we saw, a negative revision to non-farm payrolls after the last 60 months. Lizanne, I want you to talk to a given Schwab account. Don't give me this malarkey, what age are they, or where are they in their life, and all that baloney. Lizanne, they're up to their eyeballs in cash. What is the Sonders process to lighten up on cash?
Well, but Tom, I am going to push back on that because it's not just age, but it's risk tolerance, it's need for income. What is sort of the purpose of your portfolio? For some people, earning 5% on cash, that's perfectly comfortable for them if they're income oriented, if they've already saved their nest egg and they don't want to lose any of the principal associated with it. But for investors that have a higher risk tolerance, it does go back to those disciplines. It's dollar cost averaging, it's use factor screening. There's still too much focus on monolithic decision making at the sector level, at the index level, at the style level.
Which factor matters now? Which factor into July matters?
Strength of balance sheet.
Really?
Profitability. Yeah, if you look at, Goldman has the strong balance sheet, weak balance sheet indexes on Bloomberg, a huge performance spread in favor of strong balance sheet. Within the Russell 2000, the non-profitable companies over the past year are down 13%. The profitable companies are up 7%. That's a 20 percentage point difference. Interest coverage, which really matters if yields stay sticky on the high side, if we don't have a Fed that's imminently looking to start to ease policy. So those would be 3 of the top ones I think you want to focus on, and apply that across the spectrum of sectors, not just in the aggregate, but that can be applied within individual sectors as well.
Ann Sonders, thank you so much for joining us on this Friday. I hope you get out to see Robert Plant and Alison Krauss as they tour the nation. She is with Schwab. Of rate cuts. We begin in the United Kingdom with Marcus Ashworth. Marcus, thank you so much for taking time out after an exhausting 2 days. The United Kingdom needs investment. Where will it come from?
Well, it's going to come from internally. There's lots of savings since the pandemic, and it's going to come from America and the rest of the world because we are strong and stable. We've got an amazing reaction to a very low turnout, but we are a united kingdom because, importantly, through this, the Scottish National Party got beaten heavily. Labour has taken control of Scotland again. The talk of Scottish independence is going to go it's going to disappear, hopefully.
Yeah.
At the same time, we've had a very strange election. Tactical voting is dominated. The Labour Party has won 2/3 of the seats. Out of 650 seats, they've got 2/3 of them on votes. So we've also had this third party, Liberal Democrats, doing 7 times more seats, but no change in their votes. But, that's how our
Marcus, to explain to our American audience across this 4th of July nation, the distinction here in that reform in some of the more blue-collar, labor-philic districts came in second place, a strong second. But does Nigel Farage, member of parliament, and his Reform Party, do they have any voice in the process in the coming 12 months?
Well, the interesting thing is there's 3 sets of new parties that have come sort of out of nowhere. We've got the Greens with 4 seats. We've got Reform led by Nigel Farage with 4 seats. Importantly, it's himself, his chair, Richard Tice, and 1 or 2 well-known other people, not some of the other lunatics he's had. So that's a proper platform for Nigel Farage to... He got 4 million votes and only 4 MPs. So he's going to feel pretty raw about that, but he's got a pulpit now in the House of Commons. He's going to get legitimate media attention rather than just sort of unnecessary that he's had so far. And we've also got a pretty strong pro-Palestine platform as well. 4 MPs beating Labour, including the old Labour leader, Jeremy Corbyn. So the smaller parties have done very well here, almost like a European type feel to some of the results. A very strong tactical vote. But yes, we've got populism. It's embedded now. With Nigel Farage, and he has said very clearly he's destroyed the Tory slayer. He's taken basically the Tory vote down to half. The Tories lost 2/3 of their seats. Most of that, 2/3 of that, because of reform. He has had an incredibly outsized reaction. As you said, he came second in 98 seats. That's the big populism threat hanging over not just the Tory party now, but the new Labour government, who won on 1/3 of the votes. A huge majority, but it's not necessarily a very deep majority that and strength and power he's got. It's wide, but not deep.
Marcus, in reality, what does the Labour Party want to do vis-a-vis the European Union? What can it do to the extent it wants to get closer to the EU?
I don't think the Europeans really want to know much about us at the moment. They don't want to get out of anything to do with the European Court of Justice or anything to do with free movement. It's their shibboleths. I think it's going to be disappointing for Labour. I hope they've learned that lesson that actually what Rishi Sunak did with a thing called the Windsor Framework and getting Northern Ireland back into some form of political, life being out completely in suspension. He's done a pretty good job as best he could, Rishi Sunak, with a poor hand. He's played that poor hand very poorly politically. But now I think the Europeans are going to be maybe a little bit nicer, but it'll be very much, you show us what you want to give us, and then we'll think about it. You left the golf club, you ain't getting back in.
Marcus, 30 seconds is all I got. I got to get to Jane Foley on this jobs report and foreign exchange. Marcus Ashworth, there's a special relationship between France and the United Kingdom. So Prime Minister Starmer is going to meet wherever with who in France?
Well, it's still President Macron because, that's how the Fifth Republic works, and it depends who he chooses to be his prime minister, and he looks like he's going to have more of a choice than it would have been after the first round. I think the second round will show there will be no clear French, bloc who can run on its own a government. The prime minister has a lot less powers. In fact, the French president's got more powers than any other Western leader by quite some way. I don't think it matters either side. I don't think the French care much about the UK, and I don't think the UK care much about France, to be brutally honest. And I think they've all got our own problems. There will be some rapprochement, but it won't be instant.
That's French, rapprochement. Yes. That's all you have Marcus on.
That's all
he talks French. Marcus Ashworth, thank you so much. Lots of other action in economics, finance, investment, and politics, a French election on Sunday, and also a U.S. election in November. Terry Haines joins us now to pick up the pieces and piece together, I guess, the second week of July in Washington. I don't know if he's capable of doing that. Terry Haines with Pangaea joins us. Terry, right now, after the bizarreness of this weekend, the uniqueness in American history, Terry Haines, unknown.
Well, very simply, it's whether Biden's up to the job or not, and whether he can prove it or not. I mean, we've been as citizens have been misinformed about the president's condition, to put it kindly, and much of the news media, not this network, but much of the news media has willfully ignored it. Now they're overcompensating. The question is whether he's up to it or not. I mean, I wouldn't put a lot of money on it in Vegas, but at the same time,
right.
You've had situations where he's gone out in public a few times and shown fire and shown the ability to talk, and he's got Stephanopoulos coming up tonight, and that's going to be a huge moment for the campaign.
And we'll have to see that. Bloomberg, of course, will be synthesizing the questions, edited and unedited, at ABC. Terry, excuse me, choking on a fifth hot dog. I didn't do Nathan's, but I got up to 5 hot dogs. What can I say? Enough. Terry Haines, what is the probability, the likelihood, the ability of the Democratic Party to squeeze into X number of weeks a diverse campaign process of 4, 5, 6, 7 candidates to get to a smoke-filled convention?
Oh, by which you mean replace Biden? Is that where we're going?
Yeah, well, replace Biden, but to go beyond just the idea the vice president will take over.
Yeah, well, it depends on whether we're talking about him leaving the presidency or leaving his candidacy, or both. And that's a little more finely judged than I think he probably wanted. But the answer is, they can absolutely get a situation where this virtual nomination process they're going to try to pull in a couple of weeks might get short-circuited by a number of the delegates themselves who may well insist on a rewriting of the rules. There's an awful lot of dissatisfaction out there, but there's not a lot of ability by those who are most dissatisfied with being able to do something about it. This is still pretty tightly controlled, and I think Biden's trying to brazen it out right now.
So, Terry, obviously it's really up to President Biden where this whole thing goes here. What's your sense of timing? When do you think the president really has to make a decision of whether he is in it or not?
Probably between now, almost certainly, Paul, between now and the convention in mid-August. But then there's this tripwire where the virtual convention happens in sometime in mid-July, late July. So. What they're trying to do right now is, kind of wrap up the party regulars, make it all but impossible for the convention itself to remove him, which makes it even more in his judgment about whether he wants to continue or not.
And Terry, I guess the question for a lot of folks within the Democratic Party is, if he were to say, I'm going to step aside for this next election, is there any sense of what the process might be? Would there be a series of debates among party leaders? Would it just be handed to Vice President Harris? How would it work out, do you think?
Well, I think there's a group that wants it handed to Harris. But Biden, of course, is using Harris, I think, as a backstop for his own ambitions to stay. I think what ends up happening is you have a change to the party rules that releases delegates from their first ballot commitment to Biden, and you actually have, as we had before 1972, actually have an open convention where the delegates actually get to decide who they want. And in that situation, you'd have nominations by different people, you'd have speeches, you'd have unruliness galore, just like you used to have in American politics.
This is, obviously, the media, that's exciting. We're talking our book, which is We Want a Crazy Convention. But Terry Haines, I want you to take us right now to 430 South Capitol Street Southeast, Washington, D.C., to the headquarters of the Democratic National party, I guess. Jamie Harrison, Chris Cork, Jason Ray, and others. Does the president routinely, any Democratic president, do they just control the DNC? Or does the DNC have a vote to get to that convention we all want?
They control the DNC, particularly in the months and year leading up to the election. That's been standard in both parties for quite a while. And when you combine that with the fact that the parties as party organizations have been atrophying over the past several decades, it's interesting to talk about it today because I'm sitting in London. You've just had conversations about the UK elections. The party organizations are very strong in the UK, whereas they're very weak in the United States, and nowhere weaker or when weaker than the year of a presidential election.
So
Jamie Harrison's taking orders from the White House.
To sum this up, to Paul's good question, the president of the United States really is going to decide the process of his future and his party's future in the coming days and weeks, maybe to get to a Donnybrook that gets us to Chicago. Is that right?
Yeah, I think so. They've exercised huge control over this process from day one. Basically making it a primary free process. Exercising a grip on the party controls, exercising a grip on the money, as people are now starting to figure out. The money gets the Biden-Harris money gets dispersed away unless it's anybody but Biden or Harris at the top of the ticket. So there's a lot of considerations mechanical for Democrats to go through, much less the fundamental question of whether Biden ought to be their nominee and whether he ought to remain as president.
Terry Haines, thank you so much. Right now, one more shot on the trilemma of a UK election, ancient history, a French election Sunday, and an America turned upside down. He was riveting the last time he was in our studios, and we are so honored that Holger Schmieding could join us this morning. He's with Berenberg Bank, but a huge perspective on the economic politics of his EU. Holger Schmieding, how will Brussels, for that matter, how will Paris, in a fractured nation looking for a Sunday election, how will they study, interpret, accept the United Kingdom election?
Well, the UK election, of course, for Europe is a bit of a relief. The Brexiteers, who caused a lot of trouble and caused significant damage to the UK economy, are out of power. That is good. The UK will, of course, not return into the common market. The UK is not going to have anything like a debate about rejoining the EU, far too divisive. But the EU can now look forward to pragmatic relations with a good friend across the channel. And, well, what we have seen in the UK, namely a turn towards the moderate center left, is not a bad thing by European standards.
And Holger, I think that's, the hope and expectation of a lot of observers here, given what's happened with this UK election. To what extent do you believe that Europe is open to any type of rapprochement in terms of some of these economic policies?
Well, Europe is open to a pragmatic handling of things, but Europe is, of course, not open to any approach as to the UK drawing very close to the common market. There is no cherry picking. But when it comes, say, to the exact amount of paperwork that needs to be filled in for goods to cross the border, on these things, when it's about the alignment of standards here and there, the EU may take a bit of a more pragmatic approach with a Labour government that is not to blame for the Brexit mess, rather than the EU was willing to versus a Conservative government that basically was responsible for the Brexit mess.
And Dr. Schmieding, in the constricted time that we have, what is the Berenberg Bank real GDP growth, the annual real GDP growth forward of all these contested areas, the United Kingdom, France, a staggering Germany? What does a GDP feel like?
Well, Next year, we'll probably have about 1.6 to 1.7% growth in the UK, having lost out against the continental Europe. The UK has now a bit of potential to catch up somewhat. For France, we are looking for 1.4% growth. We had cut our forecast from 1.6 to 1.4 on account of the uncertain political situation. The risk to France is clearly to the downside. For Germany, which has this fiscal straitjacket, the outlook is more for growth, just slightly above 1%. But all of Europe can look forward to a bit of an economic normalization, to more normal growth again.
I got to get this question. Paul's got like 6 questions. But with what you just said, is the outcome of what I saw on Sky and ITV and Bloomberg, Francine Lacroix and Stephanie Flanders, is this the beginning of a lesser austerity across a broader Europe?
That is a big word. In the UK, not really. There's very little fiscal space for the new government. So that would be a marginal lessening of austerity. In Germany, we have just seen the government agreeing on a budget for next year, which is half austere, but which does include a few measures, small measures to improve growth. So what I would say, Germany, UK, marginal easing of austerity in the UK, not much in Germany. And as to France, we'll probably see some fiscal slippage under any new government after this election.
So, Holger, what is the market discounting in terms of the French election this Sunday?
The market is discounting that there will be a hung parliament, that no side will win. And in a hung parliament, the advantage is not much gets done, but not much gets broken either way. Also, but I'm afraid that the markets are a bit underappreciating the longer-term risks that come in France from the end of Macron's pro-growth reform drive. My, until recently, quite positive outlook on France has darkened now that we will likely have the right wing as the strongest party in government, the left also being more strongly represented, and no longer a majority from a pro-reform centrist middle ground.
Holger, thank you so much. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.